On this, the last trading day of February, and a busy week, of course, of earnings. Dow Industrial's down 121. The NASDAQ right now down 31. We've got some earnings news this morning. Paramount Global down because it fell short on revenue expectations, but it did post a surprise profit of $514 million with the streaming service. Take a look at Paramount Global. That stock is up 4.5% right now. Paramount Plus topped 67 million subscribers. Salesforce, meanwhile, is down. That stock down about 2%, reporting a double beat, but also forecasting lighter full-year revenue growth. And AMC Entertainment topped Wall Street estimates on revenue, but reported its biggest quarterly loss of $182 million. Stock down 8.8% right now on AMC. We're waiting on Best Buy. We'll hear from Best Buy later this morning, and Dell will be out after the close tonight. Joining me right now is Bolvin Wealth Management Group President Gina Bolvin. Gina, good to see you. Thanks so much for being here. Your reaction to the earnings season so far?
It's been better than expected, Maria, and it's one of the reasons why it's actually the reason why the market is up 7% year to date. If you would have told me in January that the 10-year would have gone from 3.8 to 4.3, and rate cuts would have been pushed out and the market would have been up 7%, I wouldn't have believed you. But that's really because the economic data has surprised to the upside.
EJ, jump in here. How do you see the economic data playing out in 2024?
Well, unfortunately, Gina, I think we have a lot of things going in the wrong direction, right? We have a lot of headwinds both on the fiscal side and on the monetary side. And how much do you think layoffs are playing in to the corporate profits that we're seeing right now? You know, for a lot of companies, that is their biggest expense, their workforce. And as they start shedding those workers to save costs, it's providing a temporary boost to profits. But is that something those companies are going to be able to sustain?
So layoffs and the job market is really the key to the consumer, right? Because the consumer is 70% of the economy. And we are seeing some layoffs, but that's because the Fed has raised interest rates and is trying to slow the consumer down. However, everybody's talking about consumer debt, and if you look at consumer debt as a percentage of disposable income, it's really just back to where it was in pre-pandemic levels. So we think the consumer is slowing, but is pretty much hanging in there because the job market is still somewhat tight.
Yeah, it's interesting that we haven't seen more of an impact from those 11 rate hikes. Let's take a look at rates this morning with the 10-year Treasury yield right now trading right around 4.3%. It's up 4.5 basis points right now at 4.30%. As three Federal Reserve officials say that the pace of interest rate cuts will depend on incoming economic data. Boston Fed President Susan Collins and New York's John Williams both say that the central bank's first rate cut will likely happen later this year, while Atlanta Fed President Raphael Bostic said that he's currently penciling in a cut for this summer. We are waiting on the January PCE number out this morning at 8:30 a.m. Eastern. Economists are expecting core month-over-month prices to be up 0.4% and up 2.8% year over year. Gina, I want to get your expectations, but Mark Tepper, jump in here. Is this going to be the market mover that we should be focusing on?
It is incredibly tough for the Fed to begin a rate cutting cycle if inflation looks like it's reaccelerating, which is kind of where we're at right now. But when we look at just the overall market, you know, Maria, what I'm seeing is we really have a bifurcation of what's going on from an earnings standpoint with companies across the board. Everyone wants to talk S&P 500. Large caps have done very, very well. Earnings growth up 10% year over year this quarter for the S&P. But you look at small cap stocks, the Russell 2000 earnings growth is down 23% year over year. Small business optimism and small business hiring plans are below their COVID lows. So, you know, it seems like the big are getting bigger and smaller companies are continuing to struggle and things might be getting worse for them. So, Gina, I'd love to get your take on that. Does that concern you at all?
The small cap, the Russell 2000, Mark, as you probably know, 25-30% of the index is on profitable companies. And that doesn't concern me so much because I do see, even in the past month, we've seen an incredible broadening out of the market. And industrials, healthcare, consumer discretionary, even financials, which has had a black cloud over them, have done better than the technology sector. So that gives me optimism about the rest of the year for the market.
So you would put new money to work here, Gina?
I would. I would expect a correction in the market, and I would put new money to work here. And I do think it's going to be a good year for the market based on all the economic data we've seen so far.
All right, we'll leave it there. Gina, good to see you. Thanks so much.